Yes, Goedenavond. Good evening, guys. Good evening. I hope you're all having a blessed evening. I hope you're all having a blessed evening. Okay, now today I want us to talk about market structure. The market structure is very important to understand the market structure because the market structure is the way the market moves. See the structure, the way the market moves. You see, so today we are going to dig deep down on how the price moves. You know, the price doesn't move like tap water, just straight. So we are going to try to understand the market move, the structure, the market structure. Okay, before we start, uh, let me also touch on. Let me start with supply and demand, or let me say support and resistance. Guys, there are some terms that we have to understand when it comes to forex. There are some things that we need to understand before we even start trading, before we even start looking at the market itself. You see, the market moves in a way that, like we say, forex is an exchange of currency, buying one currency or selling the other currency. So if one currency is strong, then you buy. If it's weak, then you sell. So because of that, the price is not straightforward. It doesn't move like tap water. It's not straight. So it's always up, down, up, down, up, down, and so on. That's the market structure. So now when it comes to trading, we use technical analysis. There is what is called technical analysis. Just forgive me there. Technical, we analyze the market using technical analysis. And there is what is called fundamentals. Okay, let's talk about these two. What is technical analysis? Technical analysis is a way of understanding the market structure that we are going to dig down now, like market structure, doing analysis based on the previous data, on the previous movement of the price. So when it comes to market structure, there is now what is things that we look at, like support and resistance. There is chart patterns. There is support and demand. There is liquidity and so on. That's technical analysis. So we just analyze the price based on the previous movement of the price. And then there is fundamentals. Fundamentals analysis, this is based on the news. You see, forex is affected, and it's based on the move, on how the certain currency is performing. Now the certain currency is performing due to the economy of that country. For example, I'll give you like the US dollar. If there is a poor employment in America, for example, then the dollar will be weak. If there is maybe war or there is something, then the dollar will be weak. You get it? That's when we are trading currency, forex space. And then there's index. Index is like US NAS 100, US 30, German 30, and so on. So US 100 is the 100 top listed companies in the US. We talk about Apple, we talk about Google, we talk about Facebook, we talk about Twitter, and so on. The top 100 company listed in the US forex in the market. So if, let me say, Facebook is performing poorly, or Apple is not selling, or if there's a new Apple that comes out, then it will be strong. Then obviously we are going to buy. But if Apple is not performing well, and then the iPhones are maybe faulty or something, they are not selling, then it's going to sell. So that's fundamental analysis. So then now that one, we take trades based on the news. Like always, on the second Friday of each month, not the second but the first Friday of each month, there is what is called non-farm payroll, NFP. So that one, they look at how has the employment has been performing in America for that for the previous month. So that usually affect the dollar. It's either if the employment was okay, then the dollar buys. If the employment was poor, then the dollar sells. So always the first Friday of the month is NFP, and most people trade NFP based on fundamentals. Okay, but today we are going to look at technical analysis. Now under technical analysis, we say there is support and the resistance. Now what is support and resistance? What is support and resistance? Okay, doesn't want there. Okay, support and resistance. Just going to illustrate it to something like this. And something like this. Okay. This I'll make it green. This right here on top, this is resistance. Like the word say, it resists the price from going higher. What happened when the price comes here? It resisted. It resists the price to come down, to come back down. This is resistance. And here, this is support, because when the price comes here, it's supported, it's being pushed. Here it gets momentum, it's getting pushed to go up. So this is support, and this is support, and this is resistance. So what happens now when the market, this is how the price moves now. So the support, it support the price to come at the resistance. So if the resistance is weak, if this resistance is weak, then now the price is going to break the resistance, then it will come back to retest. Now the moment it comes back to resistance, this is no more a resistance, it becomes a what? It now becomes, this becomes now a support. It's no more a resistance because it has been broken and retested. You see, it was previous resistance, but since we broke it, supporting the price now, so it's no more resistance. Now it's supporting the price to continue going up. I'm not sure if that's clear. This is the resistance. If we break resistance, then it becomes support. And it's the same. This is an uptrend. Okay? This is an uptrend. We'll talk about an uptrend and downtrend. I'm just going to leave it like that. It's the same when you talk about support and resistance on a downtrend. So we come here. This is now our what? It's our resistance. This is our resistance now. Because what? Because we are selling now. So the price is being resistance from pushing downward. It's being resistance. So with price getting resistance to go back. But then if we break it, if we break this resistance here, and then we come to retest it like this. Now, this resistance is no more a resistance. Now it becomes a support because now we are selling. Now we are on a downtrend. See? Something like this. So this was our previous resistance. Now we broke it, it became support. And then now this is our resistance. We break it, it became support. Then we continue. But then you must remember, if we fail to break, the resistance is there, the support is there to support the price to continue on its direction. The support is there to support the price on its direction. Like this is a downtrend. So this is support, it's being supported. This is support, it's being supported. And then on the uptrend, support is the one, this one. So the price is being supported. I think I should, let me do this. It's a bit confusing. Let me do this. Okay, this is a downtrend, this is an uptrend. Previous resistance turn into support. Previous resistance turn into support. We say the support the price to continue its direction. In this case, the direction is a downtrend. Here, resistance turn into support. We broke it and retested it. Now it's supporting our price to continue in its direction because it's an uptrend. Resistance, we broke it. Now it became support, so it's supporting our price to continue our direction, which is what? Which is an uptrend. So now that's support and resistance. Support is the ground, is the floor where we are standing. Resistance is the roof above us. You get it? Resistance is the roof above. So the price is always bouncing between support and resistance. Support and resistance. So for you to take note that if the support is broken, it becomes resistance. If the resistance is broken, it becomes support. Okay, now I want us to move on to the market structure itself. How does the market move exactly? I want us to understand how does the market move. How does the market move from one area to the other one? Say market structure. Guys, like I keep saying, price does not move like tap water. It always goes up, it goes up, it goes down, it goes up, it goes down. So now there are terms that we are going to use. Okay, this is our price, the market structure. So this is an uptrend, right? So we are buying, but we are not going to just boom, we buy. That's not how the price move. So we are always having what? It retrace, pull, then it continue, then we get a pullback, then we continue, then we get a pullback, then we continue, pullback, we get a pullback. Now here I want you to watch carefully here because I'm going to explain. And then we get something like this, and then we come and then we do this. Okay, just take note. I'm going to explain exactly what is happening here. Okay, that's how our price move. Now watch, we spoke about support and resistance previously. Okay, what is this here? Right there, right there, we are seeing support resistance being turned into support. We are seeing the resistance being turned into support. It was our previous support, price got rejected, we broke it. It was a previous resistance, we broke the resistance, we retested and turned to a support. Support push our price to continue on its direction, which is an resistance again. We retested it and then we continue going our direction. That's an uptrend. This is an uptrend. That's how the market move. This is a market structure. Where is the other? Okay, it's fine. Let me just use this. Let's use this. And then I'm going to just change the font. Yeah. Need you guys to watch carefully what I'm doing here. What we are doing here. We have what is called in an uptrend. Uptrend we have high and high low. Okay, high low. So here this is our high and this will happen to be our high low. Okay, that's how the market moves. High low. So we are going to mark all the high and then the high lows. Which one is our high here? our high high, and then our high low. Just watch carefully, guys. These are the basic things that we need to understand about forex before we even start trading. These are the basic things that we need to keep in mind, like how is the price moving. We are going to go on a chart and identify these areas that we are talking about here, the high high and the high low. So high high, high low, high high, high low, high high, high low. So in a high trend, in an uptrend, we have high highs and high lows. Okay, high high, high lows. Now what happens? Watch what happens here. So this is our previous high right here. To form a high low, we have a high low here. Okay, so from a high low we expect this price to go and break to create a new high high, but instead it failed to create a new high high, and then it came to break our previous high low. Okay, it came to break our previous high low. Now this confirms what? This confirms that we are up to the trend is about to change, because we failed to create a new high high here. We were supposed to break this area here. There, we failed to break there, but instead what did we do? We came here to break of structure. We broke structure of the previous lower low. Okay, so but now we have to confirm. For us to confirm if the trend has really changed to a downtrend, we have to wait for the price to create another lower low. Now we are no more having high highs and high lows. Now we are changing to lower high and lower low, because we are now going it's now a downtrend. Because if I'm not making myself clear, if you are not understanding, then maybe we can just let me know in the comment section. Lower low and lower high. Things has changed now. The trend has changed. We are no more on a bullish, but we are on a bearish. Now we are selling. It's a downtrend now. Why is it a downtrend? Because we failed to break the previous high, and we came to what? To break the previous high low to create a lower low. So what we have now, it's a lower low and lower high. You get it? Am I clear? See, we are now on a downtrend. Now we have lower low, which is this one, lower low, and then the lower high. So what confirmed it, change of trend? We failed to create what? A new high. Instead of us creating something like this, which was supposed to be a high, we instead created a what? A new. We created a new lower high. You get it? We created a new lower high. So we are selling now. So now we are going to have just lower highs and lower low. Lower high and lower low. That's a downtrend. Guys, these are basic things that we really need to understand. Now, don't forget, we spoke about what? We have to include all these things. You see, we spoke about support and resistance. These areas, they are not to be forgotten. There are lots of confluence that we are going to talk about. I'm going to cut this video very short. I don't want it to be too long. And then again, on the next topic, we are going to talk about the entries, the confirmation, and so on. Because now here we spoke about technical analysis, support and resistance. We spoke about market structure. This is how the market moves, guys. It doesn't move. The market doesn't move like tap water, like just down like that. There are areas where it respect. These areas, they are also coined point of interest. Point of interest. Why? Point of interest. Why do we call them point of interest? Because when the price comes there, always, it has to be respected. It's either it's going to be rejected or you're going to break it and retest it. The price doesn't break a level without retesting it. If it's an area of value, it will have to retest it. It cannot just pass here and then it continue down. It has to come back and retest it. Now you don't just come here and say it's retesting, I'm going to enter right away. There are lots of confluence and things that we have to consider, such as candlestick to confirm, such as patterns. We use Fibonacci to also confirm the entries and so on. So all these things we are going to, as we go, this mentorship, I'm going to be creating videos based on each, so that I don't make the videos too long and then sometimes they won't even make any sense. So I want you to take note of this one. We said we talk about technical analysis, support and resistance, market and structure, and the areas of values, which is also point of values. So every time we are going to go to the charts now, so I can just quickly show you what we spoke about. The video is becoming too long. Okay, guys, I want you to take a very note. I want you to take, let me just take a screenshot of this. How do I do that? Okay, let me just do this quickly. Okay, let's quickly jump to our what? Let's chat to our price, to our charts, to our charts quickly. Okay, we spoke about what? We spoke about support and resistance. Which one are support and resistance? If we look very carefully, if you look here, you can see our price, how it's moving. Higher, low, higher, high. Higher, low, higher, high. Higher, low, higher, high. Higher, low, what do we expect now? The price to create a high, high. Guys, it's very simple. That's just how the market moves. That's an uptrend. If we go and try to look at the downtrend, there's a downtrend here. Just quickly, there's a downtrend here. Look at this. This is a lower high, low, lower high, lower low, and then we fail to create what? A new lower low. You can see here we failed to create a new lower low. Instead, we came here and then we broke the previous high high. So now that confirms what? Change of direction. You see, that confirms the change of direction. So that's how the market moves. That's just how the market moves. Now what do? We spoke about areas of values. Areas of values. So every time we select our areas of values are the areas where we know that once the price comes there, it will be respected, either rejected or retested. Our area of values. Let's select our area of values. Our areas of values. That's on high time frame. Now if I go on just go on 60 minutes, let me just show you something quickly. You can see why is it our area of value. The price came here. This is our resistance. The price got rejected. it came again, it got rejected. Huh? It came again, it got rejected. Now look what happened after we broke. We came back and retest it. Okay, that's one. Let's look at the other one. Those are the areas of value, because you know once the price comes there, it will either get rejected, or if we break, then we have to retest it. If we break it, then we have to retest it. You can see here, the price was once there, got rejected, was once there, got rejected, break, retest. You see, those are the what is called area of values, where you expect the price to what? To move, either to get rejected, and then it continue going down, or it break, continue its direction, and then it retest. So I think that's it for today. The video is becoming too long. It's about almost 30 minutes now. It's almost 30 minutes, but I would have loved. Look at this, guys. High, high. What? High, 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 low. High, 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 low. High, 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 low. And then we fail to create another what? High, high. So we are now retesting here, and then depending on how the price is going to behave, then we can, yeah. Guys, I think on the next video I want us to talk about trend lines and patterns and so on. But for this one, I'm going to end it here, and we're going to upload it. And if you have any questions, guys, before we continue to other videos, just post, or you can comment on a group, or you can comment on the comment sections. And yeah, let's do this, guys. Let's do education to the people. Let's share the education, guys. Okay, I'll see you on the next video, guys. Ciao.